The value proposition for an actively managed brokerage account. As an income generation, cash management, wealth building, and funding tool. Every American should have been taught in school but didn't learn in economics or homemaking class. A note from the author. After 20 years in the financial services industry, I am astonished on things that seem so normal to high-net-worth investors that would bring profound value to the lives of their fellow brethren that do not share the same bank account balances and balance sheets. Let's begin. Having a brokerage account allows you the tools of the be-your-own-banker concept with more control. With a cash value insurance policy, you can benefit from insurance arbitrage. Insurance arbitrage is when the policy returns outpace the cost of insurance, resulting in policy growth with an outstanding loan. With insurance arbitrage is a function of the returns of the policy. It's not a guarantee. An actively managed brokerage account. Professionally managed mandates positive arbitrage. My firm's strategy builds monthly income-producing portfolio with cash yields in excess to the cost of capital, resulting in a positive yield spread. Example: a positive yield spread is a portfolio with a AVG yield of high single digits, double digit, minus the cost of capital, resulting in a positive yield. 10% minus 6% equal 4% yield spread. This is significant for a variety of reasons. First, an actively managed brokerage account allows you to utilize access to a line of credit facility using your brokerage account as collateral. This could be used for funding business, investment and personal items, or emergencies. Access to line of credit is not tied to a credit score or a loan underwriting process. Please allow me to give you a case study. I recently acquired 2 new clients. They both were 50-50 beneficiaries from an inherited retirement account. The original account value was $400K. During the onboarding process, I learned the beneficiaries needed to use proceeds from their inheritance to pay for the funeral costs of their father. The account was heavily invested in technology companies. I recommended rebalancing the account to generate consistent income and reduce volatility. Once we rebalanced the account, instead of spending down principal in the account, we borrowed against the collateral, and because of positive arbitrage, the income from the brokerage account will pay back the loan balance over time. These funds could have been accessed in an emergency. They could have been accessed for an investment opportunity outside of brokerage account. Example: a real estate purchase. They could have been accessed for any reason the owner deemed appropriate. Question: in your current financial toolkit, do you have a vehicle for funding that creates positive arbitrage? The good news doesn't stop here. There is a concept called buy, borrow, and die concept. Please allow me to explain. You open an account with $250,000. We purchase income-producing appreciating assets in your account. Over time, the assets will appreciate in value. No taxes are paid on appreciation. Periodically, to access cash via a loan. You pay no taxes on a loan. Let's say annual to access 10% of the portfolio, $26K. Let's also assume the cash yield is 10% annually. In this example, the $25K could be tax-free if structured correctly. Let's recap. Asset appreciation long-term, no tax, access periodically via loan tax-free. Positive arbitrage, yield spread. At some future date, when the owner passes the loan, outstanding is paid off with zero tax upon transfer to new account beneficiary. This is one tool and will continue to widen the gap between the have and the have-nots. A brokerage account allows you to build supplemental income outside of earned income. Earned will always be taxed higher than portfolio income. A brokerage account allows individuals to have access to a rainy day fund via your line of credit. Additionally, when you need access to your emergency rainy day fund, the cash flow from your brokerage account will repay the funds over time. For more sophisticated investors, we can generate additional income via option premiums. For all of these reasons, I am confident every American should own a brokerage account as a complement to their checking and saving account. By linking the two, you can access the line of credit in 24 to 48 HRs. Additionally, you can get access to higher rates of returns based on your investment profile in excess to rates offered in checking and savings accounts. If the information presented here interests you and you have individual questions, I offer a 20-person complimentary consultation. If the product is a fit for your financial goals, the account can be opened online. I hope you were able to gain value from the video. As always, we are here to be a resource for the execution of your financial goals. Respectfully, Quincy Caldwell.